Welcome back. Now, as financial transactions become more convenient by use of virtual bank cards, fraudsters too have become more crafty. The National Financial Ombud has noted a 73% jump in digital banking fraud between January and May this year alone. Tumelo Ramugondo, head of credit card at Standard Bank, joins us to discuss how not to have the convenience of digital banking cause your financial demise. Tumelo, thanks so much for your time this afternoon. I think let's take it a step back before we get to some of the issues or some of the safety precautions when it comes to virtual cards. Let's take a look at the adoption of virtual cards in the country. What have you seen in the market? I mean, personally, I can't remember the last time I used an actual physical bank card.
Yeah. So firstly, good afternoon to you and to your viewers. I sort of concur with you. I also can't remember. I don't even know where my physical card is.
Yeah.
Probably stacked up somewhere in storage. But the reality is, I think we've actually seen quite a rapid growth of virtual card, and I would say especially from about 2021. Obviously, as Standard Bank, we probably launched the first virtual card in the country around 2017, but you actually saw majority of the banks sort of coming on board, especially around that 2021 timeline with the launch of Apple Pay and Google Pay in the country that probably fast-tracked that growth. And I mean, in the last, I would say 4 years or so, if you actually look at the growth of mobile wallets when people are just tapping their phone for payments,
Yes.
that's like growing more than 100% year on year. If I look at the Standard Bank data. So there's been massive growth of that. And I think also at the back of COVID, we should always give credit to what happened during COVID as well, because with people also being unable to sort of move around, you also then saw significant adoption of online shopping. And you actually also saw, I mean, now pretty much all the big, for example, grocery retailers. I don't know if there's anyone who doesn't have a mobile app where you can order a grocery. So all those things, most of them sort of started coming through at the back of COVID. So I think the last 4 or 5 years has sort of seen massive adoption around, I'm going to call it virtual payment, whether it be online shopping or actually wallets, as far as sort of tapping your phone is concerned.
And interestingly, the turn to virtual cards was also in an attempt to, of course, combat fraud. But as mentioned, these scammers, the fraudsters, are getting smarter, and we are in an environment where there's been a rise in fraud on virtual cards. What are the key vulnerabilities when looking at virtual cards that make them more susceptible to fraud?
Yeah, so actually, I would say virtual cards in their nature and I guess in most implementation, and if I look at the Standard Bank implementation, is the major difference between what we offer in the virtual space versus, for example, in the physical space, is that you've got a dynamic CVV with your virtual card.
Yes.
And but what the dynamic CVV tends to do is, if you think about it, if someone was to steal your card details, or there's a compromise somewhere of your card details, the customers will, I mean, the fraudsters will basically have the CVV that you used or when you last did your transaction. And with dynamic CVV, if they then try and take those details and try and complete a transaction, that transaction will get declined because the CVV would have actually changed. And that's actually what makes, I think, a virtual card quite powerful. Obviously, there are instances of fraud where you do find that customers themselves get scammed.
Yes.
And as a result, they actually give away that CVV to a fraudster, and as a result, then there's a potential that they are actually exposed to fraud, which is why, as part of our current implementation, you will see that we've also implemented the merchant screening component, which it's not just about the CVV itself, but it also includes you as a customer actually logging into the app and saying, yes, I actually do transact at, I don't know, ShopRite 6060. Therefore, I actually want transaction from that merchant to go through, so that if a different merchant that you've actually never authorized actually pop up, you actually then have the ability to actually stop those transactions before you actually defraud it.
And is there room for even further safety measures? Because it does seem that a lot of consumers are still at risk to being scammed. I mentioned at the top that the National Financial Ombud has noted a 73% rise in digital banking fraud complaints.
Yeah, the reality is there's always more we can do. And I think what we're doing, I think for us, is just part of the innovations that we're thinking about, to say, how do we actually better protect customers? Because I think there's always more that, especially with changing technologies and other things that sort of keep on coming through, we can definitely improve on what we're doing. I think what we have now is our version of trying to combat that online fraud that you see. And to your point, 73% rise is massive. But there is things that we sort of saw as vulnerabilities that we thought the solutions that we've implemented would actually close. But I think at the same time, we are still thinking about how do we actually better improve. And hopefully in the next, I guess, coming months, you will also see additional sort of improvements coming through from what we have. To your point, fraudsters also don't sleep, right? Trying to
Yes.
figure out how to sort of get around these features that we put. And I think it is therefore important for us to actually ensure that we also spend enough time on this topic, making sure that we can better protect customers. And I think with every technology advance that comes through, as much as it introduces potential vulnerabilities, but it also provides opportunities for us as a bank to further innovate on this topic.
And I wonder, Tumelo, then if these fraud risks weigh on adoption?
No, they definitely do. I think to the point I was making earlier, especially like sort of pre-COVID times, you could actually, I mean, the reluctance to spend online was significant.
Yeah.
And if you spoke to the majority of the people, I mean, other than maybe some of the customer experience pieces, fraud was always top of that list as to why not spend there. But I do think part of the reason, for example, again, we sort of going out the way we are is because we understand that fraud is top of mind for customers and the risk of them being defrauded on online is there and they're actually concerned about it. One of the things that we then sort of decided to do is, just given the security that we believe we've put in place around this new virtual card from a Standard Bank perspective, we're actually comfortable to say, actually, if you ever get defrauded online, we'll actually give you a full refund of the transactions
Okay.
that you got defrauded, which is actually something very, very different that we haven't done before. So we actually preferring to give customers a guarantee that if you use our virtual card and there's a problem online from a fraud perspective, we'll actually give you a full refund so that there's actually no losses on the customer side.
And just before I let you go then, Tumelo, innovations like, virtual cards are also an attempt to move SA into a cashless society, right? And from a banking perspective, in terms of transactions, are we at a point where we are transitioning into a cashless economy?
Yeah, so I'll say unfortunately not yet. I think it mostly just depends on which matrices you decide to look at. Reality is, I think you are seeing a big transition. Actually, I think we've seen it for quite some time. Transition for people actually moving into cards and using their cards more and more. But the reality is, South Africa is a two economy
Yep.
country. You do have that. And I'm going to call it mass market economy as well, or the informal economy as they call it. And in that space, you do find that given the activities that the customers at that level actually sort of perform, they are required to actually carry around cash. And that, I think, it's something that we sort of need to acknowledge. I do think you do see a big transition in terms of adoption of cards, but I don't think we're at a point where we can really say we're out of the cash bucket. I mean, if you take, I don't know, most township, like the township economy, you probably buying food using cash, you riding a taxi using cash, and you're probably paying someone that's doing some work for you using cash, because that economy is mostly cash on its own. So I do think that fact that we still have two economies is still very true. The one that's probably a lot more advanced from a tech perspective, but you do have an informal economy that is very cash heavy that we still need to tackle.
All right, let's leave it there. Thanks so much for your time and sharing your insights with us this afternoon. Now, that was Standard Bank's head of credit card, Tumelo Ramugondo.